live on all platforms. All right, guys, you know the drill. Load up that chat box with questions about home purchasing. Load it up with what credit score do I need? What FICO score do I need? What is Credit Karma real? What's my down payment? Is there down payment assistance? Is there programs where I can get them for $0 down? Can you help me in Illinois? Can you help me in Arkansas? Can you help me in Hawaii? Ask all the questions that you think is important to help you guys on your home buying journey. I know everybody would like to buy a house, but can everybody actually buy a house? That's the question, and we will let you know right here at Chris and Lee Live. Live.
Everything's live. Everybody log in, start asking the questions. We're about to try to get a house in 2024. We're going to tell you about the rates. We're going to tell you about the best case scenario rates you can possibly get and what it costs you to get it.
What up,
because
C-Clothes?
It's not so straightforward. It seems like it's straightforward, but it's not so straightforward. So, as you got those questions, let's talk about it. Let's talk about having a good realtor. How important is it to have a good realtor who understands what they do, understands how they do it, and protecting their client? And let's see what we got. What kind of questions?
C-Clothes says, let's roll. Mexico asking for a friend. I say yes. Always yes to Mexico.
Whoville hater first. If you ain't first, you're last.
I'm first and not last is what he said. What up, Tony Bows?
You ain't first, you're last. Whoville hater says, I'm first.
Whoville hater, I want to buy a house in Puerto Rico. We can help you, Whoville hater.
Yeah, we do.
Financing a car can stop you from buying a house? Question mark.
Yes, absolutely. Let me tell you how it happens. It happens a lot too. Here's a case that happened to me probably 6 months ago. Young kid in California comes up to me. He's a lineman, which means he goes up on the telephone lines. He makes a lot of money, like $140,000 a year. And he's like, hey, how much can I qualify? He's got a little bit of money saved. He's got $140,000 a year income. I was like, holy shit, that's great income, man. You're just a kid. Good for you. Congratulations. Let's get you a house. So I pull his credit, and immediately I see a $1,600 payment. And I said, you have a $1,600 payment for something. What's that for? He goes, oh, it's my new Raptor. You want to see it? And I said, one, yes, I do want to see it. And two, my God, that hurt you a lot. It hurt you a lot. So, can financing a car stop you? Yeah, it reduces your purchasing power.
I think people feel like I got a brand new house. I got to roll up in a brand new car. No, you don't. Buy it after.
If you're
you can
smart,
still get the car. You can still get the car. So here's how it works. You get the car, you can't get the house. You get the house, you can still get the car. So if you want both, get the house first.
Tony Bows, hello friends. We saw that. Have Puerto Rico want to do that, want to help you.
Todd, how much money can you make before you get assistance for down payment?
How much money can you make before?
That's the question.
Okay, so there's no low limit. There's no loan limit. A low limit, not loan limit, low limit. There is an AMI, which is on most programs, not all. There's a few tiny little niche programs that don't have AMI. But AMI is area median income. So, like for instance, in Los Angeles, if you went for a down payment assistance program and you made $188,000, you qualify. If you made $189,000, you don't qualify. So that's too much. There is a line at the upper limits. At the lower limits, it's just debt to income ratio and do you fit into the program? Because the truth is, when you get to if you're at the lower end of it, like 40 grand, you won't qualify for the down payment assistance program because your purchase power is way less than if you put your own 3.5% down in most programs. What do you say about that?
I say that is 100% accurate. And if you make a lot of money, you really don't need down payment assistance. But you do have a spending problem. So I would say adjust that spending problem. Stop going to Starbucks. Stop throwing monies out at the restaurants. Stop buying plane tickets for your friends. But we do have one program in-house that does not have an income cap that will allow you to get the down payment as either a gift or a gift grant or a second that you do have to pay back, and doesn't have an income cap, and it's actually a pretty phenomenal program, and you can go all the way to your buying power.
Yep.
So whether you make too much money or not, we got your back.
In case you're new here, we're Chris and Lee, licensed loan officers, NMLS 944254.
1066958.
And we teach you how to get a house in 2024. I've been in finance since 1992. And when we originally needed NMLS in 2012, I got my NMLS. You?
2013.
You got yours in 2013, but you've been doing loans for how long?
Since 2006.
2006?
18 years.
18 years.
18.
So
Whoville Hater. Move there for 6 months and 1 day of the year.
that's
a hack.
Puerto Rico.
That's a hack.
Puerto Rico.
No doubt
Puerto
about
Rico.
that. User 9152 on DSCR. What if the house needs a little bit of fixing first?
Fixing first?
Doesn't matter.
Yeah.
Doesn't matter.
DSCR, such a good program. But here's what catches everybody on DSCR. Remember, here's what everybody wants in the world. They want no down payment, the lowest interest rate you possibly can, and can I not pay taxes, and maybe not insurance too, please? That doesn't exist.
And a pool.
And a pool. Don't forget the pool. Yeah. So it doesn't exist. So every loan has a problem, or should I say challenges or features. In a DSCR, it's pretty simple. You have to have 20% down before we even start talking about it. 20% down. And you better have a pretty good FICO. If you don't have an 800 plus FICO, DSCR is going to be a bit of a challenge. Even 750, it's doable challenges. If you're over 800 in FICO, it gets way easier. And actually, if you go 800 in FICO and you're willing to put more than 20% down, the packages get pretty darn good. So if you've got a problem on a DSCR loan and you're putting 20% down and you're going to pay to fix the problems, ain't no problems.
Ain't no problem. Ain't no problem.
Stop chewing gum. West
Walla,
Kitty
walla,
Cat.
walla, walla, walla.
West Kitty said, stop chewing
Talking
gum.
to you, not me.
Dude, West Kitty.
Not me.
West Kitty
I'm
Cat.
sponsored by Altoids.
He's sponsored by Altoids, yeah. Yeah, I do it out of kind of respect for this guy because, you talk for an hour and it doesn't always go well.
And you don't brush your teeth.
So?
Whoville Hater, will you go off my income pre-tax or after? What about adjusted gross after deductions? What about?
Whoville Hater, somewhat depends. What would you want me to go off? Is that a real question? Can that really happen? What if you said, hey, Lee, I make good money, but I don't want you to see all my deductions. Can you do that? I'd say, Whoville Hater, here's the plan. We're going W-2 only. So, if you just show me your W-2s and I set you up for a W-2 only program, I don't have to look at the rest. I don't want to look at the rest. I just need your W-2s and I will submit your loan as a W-2 loan only. Can you do that? Yes. What are the downsides? Rates are a little bit worse, a little bit, not a lot, but a little bit worse. Rates are a little bit worse, and there's not a lot of Kentucky windage in that. Because if you say, hey, I made $89,000 W-2, then when we fill out the 4506T and the underwriter reaches for your transcripts, as long as the IRS says $89,000 and you said $89,000, that's all they're going to look at. So, can I do it without the deductions? Sometimes, but not all programs will go W-2 only.
Nick 37. Now all the haters are gonna come out on this one.
Here we go.
But here's the facts. If on disability is owning out of the question.
No, we actually do quite a lot of disability loans. A lot of them. Here's why. I'm a veteran. A lot of people know that. My dad's a veteran. My son's active duty Navy. We're family, military family, and we specialize in the VA loan. We actually have permission in certain areas in the VA to put our flyers out there and market ourselves as loan officers because my face is on it and I hold myself accountable to every veteran that I work with. So we work with a lot of veterans. And if we get a veteran that's 100% service connected on disability, the average income on 100% service-connected disability is about $3,800, somewhere like $3,600, $3,800, sometimes $43,000, depending on how you got injured. And then Social Security disability, that's going to be between $1,500 and $3,500, somewhere in that range. But if you put those two together, it's about $5,000 to $8,000 a month. Take that $5,000 to $8,000 a month, gross it up 25%, and I'm looking at a pretty good house. And We do them all the time, like often, very often. So, can you get a house on disability? Yes, we do it all the time.
Well, the follow-up is going to be, what if it's not VA disability?
Yes,
and the
it's not.
answer then is still yes. Disability is disability, okay? SSD, whatever it may be, we can do it. Now, here's where the haters come out. They say, yeah, but you can only get a shack in the shitty part of town. Well, what you can afford is what you can afford. But the answer is you can buy a house, you can be a homeowner, you can get the tax breaks, you can get permission to paint your house whatever you want to paint it, unless you're in an HOA. And it's yours. So, hope that helps. Nick 37.
So, people want to know, what are the rates today? I'm going to give you rates, but I'm going to give you a lot of package on it. Here comes the package. So, if you called and you said, hey, Lee, what are the rates? And I'll say, the only way I can tell you your rate is to pull your credit, calculate your income, and build your file. Then I give you your quote. But if you went to New American Funding at the links right at the top, if you go to our profile, go to links, go to Cool Stuff, today's rates. If you went there, you would see 6.75% on a 15-year fixed. What? 6.75%? And then 5.875 on a 30-year FHA. 5.875. That's amazing. Yes, it is amazing. But let me tell you how you got there. Because if you look right below the 5.875, you're going to see 7.091 APR. What is that? Well, it's actually a piece built into the financial system to tell you if you're paying for that rate. And last time I quoted a 7 to a 5.875, it cost them $22,000. Could they do it? Yes, they could. Now the question is, should they do it? And that's a whole different conversation, because we're going to have that conversation. And the only way, so now bear in mind, when New American Funding is putting out these rates, they're putting the best case scenario, 20% down, 800 FICO, 25 DTI, best file a loan officer can have. Best file a loan officer can have, and you're going to pay to get that 5.875 rate or a convention of 6.75. The reason you know this is because of the spread between the interest rate and the APR. You see that? I don't know what just happened.
I think it's commercial. I don't know.
We just lost
What's
our
up,
feed.
Aileen Meza? How you doing?
Aileen
Long time
Meza.
no see.
Oh my, Aileen Meza, great to see you. Great to see you. We are live on TikTok teaching people how to buy a house in 2020. You have to click that. Yeah, 2024. And talking about the interest rates, we got kind of a hiccup on the streaming here, so we're trying to fix that. But if you went to today's rates, and they have to be real rates. They have to give you real rates. But if you go to the little asterisk, you're going to find out this is 20% down. What? 20%? 800 FICO. What? 800 FICO. And 25 DTI. 25 DTI. Very few people have that profile. They do exist. I get one occasionally. But most people struggle at one of these. They're either pushing the line to see how much they can buy, or their FICO's in the 620, 640, 660s. Because anything in the sixes, you're not going to get a rate like this. No way.
So
no
what
way.
do you say if someone said, hey, but my loan officer said I can get 5?
Yeah.
What do you say to that?
I say somebody is not being entirely truthful with you or doesn't understand the world. They don't understand the systems. Because you know what? I would say, well, you know what? Go to my company right now. My company will give you 5.875. They will? Will they really? Yes, they will. Why? How will they give me 5.875? How will your company give me 5.875? Oh, that's easy. First, have an 800 FICO. Do you? Okay, so that's where we lose most people. Do you? Well, I dig what you're doing, but that's not where we should be. Do you have an 800 FICO? No, you don't. So, close that. Go there. There? Yes. Do you have an 800 FICO? Now click that. Yeah. Do you have an 800 FICO? If you do, we go to the next spot. And the next spot is, hey, you're buying a $500,000 house, but you're actually qualified for a $1.2 million house. So you're buying at about 26% debt to income ratio. Are you doing that? Oh, if you are, yeah, we're next thing. Perfect. Beautiful. Beautiful. And you're putting $100,000 down, 20% down. Yes, if you meet all those, absolutely, this works for you. It will work for you. I'm trying to get it there.
Yeah. Just so we can at least read it.
Yeah, I know. We're having a little Technical difficulties. We appreciate you on Instagram. We're on Facebook, Instagram, TikTok, and YouTube. We're live on all the platforms teaching you how to get a house in 2024.
All right, I got it.
All right, cool. Where are we?
All right, so who's the hater? If a property has commercial and residential property on it, do I need a commercial loan? Ooh, good question. So here's what it is, Whoville hater. There's a lot of these mixed-use areas, okay? Sometimes you might go down the street and it's like commercial, house in the middle, commercial. So the area is zoned commercial, okay? It's probably zoned commercial. But if you can go to the town, if you can go to the city and go to the property department, I forget what it is, and get a rebuild letter that says that you can rebuild this house 100% residential, then you can go residential. It doesn't have to be commercial. So you don't have to apply to the credit, to the down payment, to all that stuff. You can go with traditional financing, and that's called a rebuild letter. So in those rare scenarios, we usually have the buyer do that or the agent do that, and if they can't get any luck, then we give it a shot. But yeah, so there's your answer, Whoville hater. Whoville hater also asked, after my deductions, the government thinks I'm poor, but my adjusted gross goes against my income. So self-employed? I'm assuming that's self-employed?
Maybe.
Top line, it was a lot, and you had your deductions, and your bottom line says this. Okay.
Yeah.
How do you get around that, Lee?
Oh, it's a good question. Very good question. I'm glad you asked. Here's the answer. If you own a business, I'm just going to go with a certain type of business. You own a certain type of business and you file what's called 1120s. 1120s are what you tell the IRS you made. And then inside of your 1120s, there's something called a Schedule K1. The Schedule K1 will tell me how much of the business you own. So let's just say you own a business that top line's $1 million. After it pays all the expenses, you land up with $200,000 profit in the business. Hey, Lee, I'm the only owner. How will I know that? Schedule K1 will show me who owns this business. And if it says you are 100% owner, then that 200 grand is yours. Yeah. That 200 grand does not have to make it to the 1040. It doesn't have to. It can, but it doesn't have to. If the 1040, if the 200 grand stays there, and you're 100% owner, I can probably use that as your income, probably. And if there's money in the bank, let's just say, hey, there's 100 grand in the bank, but it's in the corporation's name, and I see the K1, and I show 100% access letter, I'm able to use those funds for certain things in your loan. So, can it be done? Yeah, every day. We do it all the time. Nice. So a lot of people, when they're self-employed, it's just a Schedule A, Schedule C, and that means that you just add it to your, it's a form on your, portion on your 1040. Portion on your 1040. But if you actually own a corporation, like incorporated, you pay an accountant to do the accounting, there's a whole system there. That doesn't exclude you from being able to buy a house. You just have to have a good loan officer who understands how to factor these things in. So yes, we can make it work. Any thoughts on that?
No, that's pretty spot on, man. Good job. Okay. Lady Chica, bank statement loan, please. Talk more about that.
Okay, cool. Bank statement loans are actually very simple. Very simple. Very simple. He's going to tell you how much down in just a second, but I'm going to tell you how we calculate your income. So you say, hey, Lee, I don't want to talk about my 1040s. I don't want to talk about any of the stuff. All I want to do is say, hey, listen, I got a lot of money coming into the bank every month, and I want to use that to buy a house. I say, okay, cool. I can do that. I can. I need a FICO score, so I got to pull your credit. Once I pull your credit, you have to be at a high level of FICO score. But once I pull your credit and you say, okay, cool, how much you put in the bank every month? Every month I put in $20,000 from whatever reason. Okay, cool. So $20,000 hits the top line. Now show me the last 12 months. Do you really want to see 12 months? Yes, I really want to see 12 months. So you give me 12 months. And there's $20,000, all the way through 12 months, $240,000. All right, cool. I can prove that it's coming in for 12 months. Very simple math. Cut it in half. Cut it in half, your income's 10 grand. That's it. It's really that simple. Now, if you have 20 grand on 1 month, and then 14 grand, and then 34 grand, and then 8 grand, and then 22 grand, I need 24 months. If it starts to get really erratic, I need a proof that this does consistently come in and that you own the bank account. And if you do, the simple math is cut it in half, 50% I'm able to use. There's some more complications than that, but that's the simple version. And how much do we need down?
So down payment assistance, I'm sorry, So bank statement programs.
I'm like, whoa,
down.
back off, buddy.
Same
You're getting
thing,
a little
same
aggressive
thing.
there.
So bank statement programs are non-QM mortgages, non-qualified mortgages. This is not traditional financing. Traditional financing, FHA conventional, USDA, VA, that type of stuff. And you don't get the preferential treatment when it comes to down payment, like zero down FHA or zero down VA or 3.5% FHA or 3% conventional. All that's out the window, okay? So bank statement programs are going to start at 10% down, which is very rare because the climb that hill and get over that hump is very difficult. So most people are putting 15 to 20% down on bank statement programs. Second, interest rate. You're not going to get the nice interest rates that traditional financing have. Even at the ones that he put out this morning, which are fantastic, majority of people are in the sevens. Majority of people are in the sevens.
Some are in the eights.
I'll say it again. Majority are in the sevens.
Say it again.
Some are in the eights.
Some are in the eights.
Okay, so you're not going to get that either. You're going to be a point to 2 points higher than whatever traditional financing is, okay? That being said, this program saves a lot of people, gets a lot of people into houses, and for the next couple of years, this is actually perfect timing. Strategize to make enough income because you know exactly how much you need to make in order to pay your bills, pay your loans back, pay your home loan back, file a couple years of taxes properly, and then when it comes time and the interest rates drop, and they're going to, you'll refinance into traditional financing and be in a beautiful scenario. So just use this to get in, finance later.
CCG says, I have an 850 FICO. CCG, congratulations, and I don't believe you. I don't believe you. I've been doing this for a long time. The highest FICO I've ever seen, Tri-Merge, 846.
This is CCG, man.
CCG says, I got an 850 FICO.
It's our boy or girl. It helps us.
850 FICO.
Somehow.
850 FICO,
Pops
yeah.
by, put it in the chat.
Yeah.
Cambo, 670 FICO, getting a 5.65 FHA for 1.3 points.
Maybe. There's certain times 670 FICO. Well, just so you'll know, let's say that you're buying a normal house in California, $800,000. So 1.3 points of $800,000 is roughly $13,000. $13,000? Is that about right? Yeah, about $13,000. So it would cost you $13,000 to do that. Now the question is, should you? That's the big question. That's the big question. So if you understand it from a macro, from the stepping far back, like real far back, you have to know that this guy, his name is Jerome Powell. He is the chairman of the Federal Reserve. Who's the Federal Reserve? Well, there are 12 people that basically govern the financial system of the United States and by default, the globe. So this guy is very important. He doesn't make the decision himself. There's 12 people. These are really unbelievably smart people that earn their way into this spot, and they make up the Federal Reserve. The Federal Reserve is called the FOMC, Fair Open Markets Committee, and the FOMC right now has interest rates. These are all 12 members right here, all 12 members voting at 5.25 and 5.5%. That's where our current rates are right now. That's called the Fed funds rate. The Fed funds rate is 5.25 to 5.5. And here's what they anticipate over the next 2 years. This is into the end of 24, 25, 26, and touching 27. They all come back to a consensus because if you'll notice, some of them think they should move interest rates up. Some of them think they should move them down. They all come back to a consensus right at the end of 26, beginning of 27, at a Fed funds rate of 2.5%. That's what all the smartest people in finance who actually dictate the rates are saying. Okay, so what does that mean? That means that interest rates are predicted to go down dramatically over the next 2 to 2.5 years. Dramatically, not a little bit, and it's not going to happen a lot this first year. If you look this first year, they're across the board. Some say you should raise it. Some of the Fed members are going, no. To get control of the economy, we need to raise the interest rates. The majority are saying hold strong or come down just a little bit. As you go into the next cycle, they get more spread, but they start coming together at 2.5%, which means interest rates are going to go down. Okay, so then the next question is, should I buy down my rate? Okay, so let's just say you're in that category where you get a 7.5% at par. 7.5 at par. Par means you don't pay anything, you don't get any benefit, 7.5 at par. But I can buy it all the way down to a 5.25 for about $22,000. Okay, is that a good idea? Here's the catch. If you bought it all the way down to 5.25 and these actually happen the way the Fed says, when we hit 2.5 Fed funds rate, the best guess is it will be in the 4s. So you paid $22,000 for a 5.25 rate when everybody nowadays is getting them for free in the 4s. Okay, so there is a break-even period of how long it takes you buying down the rate before you break even. The average break-even period is about 34 to 40 months. 34 to 40 months, which is longer than 3 years. Should you buy it down? I tell most people at this moment, not the best time to buy it down. Matter of fact, New American Funding is doing something unbelievable. They will do a free refinance. Free refinance for you. When they say free from New American Funding side. You still have to pay for the notary. You still have to pay for a few things. But from the New American Funding, the bank side, one of the biggest costs, New American Funding says, we'll do it for free for the next 5 years. 5 years. Because they know they're going to have to compete against banks when the rates go down. They know it. Everybody knows it. Everybody knows it.
Amy Jungle. Sup, guys? Wonder if you think rates will continue to stay stagnant through summer, waiting impatiently. We all are. We're all waiting impatiently.
CCG says, I'm the new owner of your office. Building rate is going up by 100%.
Wait, you gotta answer Amy.
Oh, wait a minute. Amy.
What, you just,
Stop, guys.
You
Sup?
zone out for the last 15 seconds?
Sup, guys? Sup? Wonder if you think rates will continue to stagnate through the summer. Zammy Jungle, Zammy X. Yeah, I do.
It's Amy Jungle.
Amy X Jungle X. Amy X Jungle X. Yeah, I think they're going to stagnate. I don't think we're going to get... See, here's the thing. These guys are steadfast. They know what they're doing. They're not in a hurry to bring the rates down. I am. He is. We'll make a shitload more money. Can I say that? Whatever. We'll make a lot more money when the rates go down. We will make... We do good now, but we're going to make a lot more money when rates go down. Partially because most of the loan officers could not survive in this industry, and probably 50 or more % of the loan officer pool went bankrupt, and they're selling solar or they're working at Starbucks or something else. But the ones that survived, these guys are in a very good seat as long as they can survive for the rest. But here's the catch. The CPI is not coming in the way. The first 3 reportings of CPI came in way above expected. This most recent one came in a little bit lower than expected, which is kind of good. But one little blip isn't going to change anything. And what this guy keeps saying over and over and over again, he's like, hey, I'm not panicking. I'll just hold longer. We can hold as long as we need to. We have no problem holding. No problem. What we don't want is runaway inflation like we had in 1987. We do not want that. And I will hold as long as it takes, and I don't care who's pushing me. Did you know this guy cannot be fired by the president? He cannot. His appointment comes up 2 years into every presidential election for that exact reason. So a new president can't come in and go, hey, you're fired. They actually time it. So this guy has 2 years after a president takes office, and then 2 years later, the president can go, you're fired, bring somebody else. But that's not how it happens. It's not. These guys, it's not one guy. It's not one guy. It's all 12 members of the FOMC, and they are setting Fed funds policy. It's not an easy thing, but they're not in a hurry. Now, I want them to go down. All the realtors want them to go down. All the clients want them to go down. Everybody in America wants the rates to go down. They do. But it's not going to happen fast. So I think they're going to last through the summer and maybe fall, maybe winter, which is third and fourth quarter, we'll start seeing reductions. His next speech, May, he already did the May one, June. His next speech is in June. And he has not backed off yet, cutting the Fed funds rate 3 times by the end of calendar year 2024. He hasn't backed off of that. He hasn't. When he backs off of it, there'll be some kind of response in the market. But if you understand this, even though the market's like, hey, you should cut. Oh, no, don't cut. Hey, this guy is steadfast and solid and good stuff.
Got a lot of questions. Everybody hang in there. Don't leave. We're going to answer every single one of your questions. But do load up that chat box. We want to answer all of them.
CCG, I'm the new owner of your office building. Rent is going up 100%. The owners
Did someone coach you to be louder? All someone say, hey, Lee, be louder.
Be louder. I'm trying to be louder. Hey, Rick and Patty, who are the owners of New American Funding. As far as we know, they could be somebody else. But Rick and Patty, they're the owners of the New American Funding. They own this building. If you bought it from them, yeah, if you bought it from Rick and Patty, dude, good for you.
Good job, because we destroyed this office.
We destroyed it. We're not fun. We're not nice to it.
Mason T, will interest rates keep rising beginning in 2025?
Probably not, Mason T. Probably not. They will hold. And now here's something that you should know. In hold is Fed funds rate, which is 5.25 to 5.5%. That's where the Fed funds rate is. But there's this slippage because the mortgage interest rates are usually 100 to 250 basis points above the Fed funds rate, which means 5.25 to 5.5, take 5.5. 100 basis points above is 6.5. 250 basis points is 8. So we're hovering in that range. When there's certainty in the market, the slippage will go down to between 100 and 150 basis points. But when there's uncertainty in the market, it hovers at 250 basis points. It's about 200 basis points above right now. So will they continue rising? I think we're done with the rise because the Fed has committed to the pause, called the pause. Here was the ascent, the pause, and then the pivot. The pivot is when things start going down. Keep going.
User 4802, downside of down payment assistance.
You go. I'm talking too much.
You go. No. Okay, so down payment assistance does have a downside. The downside to down payment assistance is a couple different things. The biggest one is your interest rate increase, okay? In order to make it work for the banks, they have to give you a higher interest rate. They have to make more money on the program in order to make it work for them too.
So it's a profit deal?
Has to work for everybody. Can't just work for one person. And if you look at the Dream for All program, that works for only one person, and that's Governor Newsom. But the down payment assistance in general, across the board, doesn't matter what program we get. If it could be the county, city, Lyft, could be a lot of different ones, could be the one here at New American Funding, they all have a higher interest rate. Now, second, you're going to have to pay the money back. Now, I don't know if that's necessarily a bad thing because you're going to pay the money in the front or you're going to pay it in the back. So you may have to pay that regardless, but you are going to have to pay that money back. And in a lot of cases, I'll give you one particular. If you don't build enough equity, you're going to have to take that money from somewhere. It might have to come out of pocket eventually. So when you do a grant, it can be forgiven. But if the interest rates change in the next 2 years and the grant says you have to be there for 3 in order for it to be forgiven, you might miss the boat. Yeah, you might miss the boat. You might have to pay that money back regardless. So down payment assistance has a limitation on how much you can borrow. So for instance, let's say I qualify you for $500,000 and then you're paying your own down payment, and then you get down payment assistance. You only qualify for $380.
What?
$120,000 swing there. It may be a whole different
neighborhood. Is that a recent one?
Yeah, it's a real one.
Yeah.
It may be a whole different neighborhood. You might be in a beautiful one with great parks and great schools, and you might now be in one with not so good parks and not so good schools. So it does change a lot of things. That being said, it's not a good or bad for anyone. It's either appropriate for you or it's not. So you make the decision. But if you have the money for the down payment, you can make things easier on yourself. You can take all that data that I just gave you away and be on the better side with just going with regular traditional lending.
Kick facts. Hey, we're on Facebook, Instagram, TikTok, and YouTube. Navy Mom Donna, great to see you here. We love to see our regulars popping in and supporting us. We appreciate you guys very much. What else we got?
AI tattoos. Do you need reserves? I'm bank account to be approved for a home loan. Do you need reserves in bank account to be approved for home loan?
Sometimes, but not always. Not always. So what are reserves? First, we have to answer that question. So you take your PITI, principal, interest, taxes, and insurance, lump it up into one number, and that's $3,000 a month. $3,000. So if I say I need 1 month reserve, that means I need $3,000 in the bank 1 month. If I need 3 months, I need $9,000 in the bank. So if you have an amazing FICO score, an amazing 780 or better, the reserves aren't always needed. They sometimes want 1 month reserve. That's it. 1 month. 1 month. Even with a down payment assistance program, if you have a 780 or above FICO. If you have a 622 FICO, yeah, they want reserves. Here's why. Because you earned your FICO score. Whatever it is, check that question. You earned your FICO score, whatever it is. And that means if you didn't pay your debts back on time, they know that. And the way they factor that is say, hey, if you run into trouble, We need to know you can at least make the mortgage payment. That's what that is.
Maybe Mondana said, I saw yesterday that my house in Arkansas is now worth $60,000 more than I paid for it.
60,000. And how long ago was that? Maybe
3 years?
no, I think less than that. I think 2 years. 2 years. That's a hell of an appreciation. Hell of an appreciation in Arkansas. Arkansas is a badass place. You're messing everything up here, man. I can't see. I don't know what the questions are.
Don't freak out. Look how nervous he
freaking
gets.
out. I get a little nervous.
You need to lead him. Go this way, Lee.
Okay, what do we got?
Gum chewing?
Yeah.
Do you need reserves in bank account? We already read that one. If you're late on payments, does it affect your chances of getting a loan for 2 years? Said Zadie.
A little bit, but not a lot. Not 2 years ago. If you're late last month, then something's going on in your life that's making you late on payments. It's either I don't have enough money or I don't have the responsible mindset to pay it. One of those two. And if it's going on right now, it could affect buying a house. If it happened 2 years ago, it will affect your FICO score. And then we have to write what's called an LOE. LOE is letter of explanation. So the underwriter is going to go, hey, you were late 2 times on your credit payment in 2020. Explain it. And you're going to go, well, there was this little thing that happened where a lot of people lost their job and I didn't have money for 2 months, so I didn't pay it. And then as soon as I got a job again, I paid it. That's the explanation. The underwriter is going to go, oh, I heard about that thing that happened 2 years ago. I believe you. I'm not going to worry about it. So that's called an LOE. If you can explain it away and it makes sense and it's old and it looks like it's not going to happen again, then probably not that much.
Yeah. Stanka. Can I qualify for a city finance first-time homebuyer program if I have a rental property? So rental property, is it in your name? Stanka, is it in your name? Because if it's in your name, you own a home.
Yeah.
How can you be a first-time home buyer if you already bought a house?
Yeah.
Even if you didn't buy it, even if your grandparents gave it to you, even if you somehow got it through marriage, you own a home. So because you own a home, you will not qualify for a first-time home buyer program again. Even if you try to slide that into an LLC, still your house.
Still your house. Thank you. But I got some good news for you. I got some really good news. Most people think of first-time homebuyer programs like there's this amazing, wonderful, absolutely unbelievable thing. There's only 2 real good programs out there. That's Home Ready and Home Possible. And they only help you if you've got a really good FICO score. FHA 3.5% doesn't have to be first-time homebuyer. You could have moved out of your conventional loan right now, today, and go into an FHA as long as it is your primary residence.
Talking about a city finance, though. And those are the worst, in my opinion. City and county, state.
Oh, yeah.
Those are the worst.
The worst.
Tell them about Dream for All.
Okay, so Dream for All. This is like it screws the people over. I think it screws the people over big. Here's why. In California, we have this thing called Dream for All. And Dream for All says, hey, you know what? California has a dream that you're going to own a house. We're in the state of California. We're big, we're bad, we're going to help you. But they're like the mafia. And I call them Uncle Cali. Uncle Cali. Why? Because you say, hey, listen, Uncle Cali, I'd like to buy a house. I'd like to buy a reasonable house, reasonable price house, $500,000 in California. That's a reasonable price. So I'd like to buy a $500,000 house, Uncle Cali. Can you help me? Can you help me? Uncle Cali says, yeah, you know what? I'll help you. I'll put $100,000. $100,000, 20% to help you. 20%. And you go, hey, that's amazing. I love you, Uncle Cali. Yeah. Forget about it. You know, I'm here for you. Oh, $100,000 for you. Okay, cool. You buy the house. Guess what? The house is worth $500,000. You go to Uncle Kelly. You say, thank you very much. Yeah, hey, don't worry about it. We're in business together from now on. We are in business together. Your Uncle Kelly's here for you. You say, wait. What do you mean, Uncle Kelly? We're in business together. You that $100,000? Yeah, I want it back. I didn't give it to you. You think I'm stupid? You're crazy. I'm not giving it to you. I want my $100,000 back. We're in this together. I'll wait as long as you want, though. I can wait 10 years. I can wait 20 years. I can wait 30 years till you pay me back. But in that meantime, not a free loan. I want interest. No, you know what? Scratch that. In the state of California, houses appreciate faster than interest rates. I want shared appreciation. I want my portion of the appreciation. We're in business together. Your Uncle Callie's here for you. So wait a minute, Uncle Callie. When we sell this, you want your 100 grand back? Oh, better than that. I want first out. I am first out. If only one of us gets made whole, it's me. I get out with my shared appreciation and my 100 grand. Don't worry about it. Uncle Callie's here for you. Forget about it. Now, does that sound like a wonderful program? The way they sell it. You see some loan officers on TikTok or Instagram, Facebook, YouTube. They're like, hey, the Dream for All program, it's amazing. They'll get you 20%. Yeah, if you didn't read the guidelines, that's what it sounds like. You can spin it so it sounds really good. Really good.
Just trying to get clients is all they're trying to do.
Yeah.
Trying to, by fooling you.
Yep.
CCG said you don't want to bet 500. Oh, it's
850 FICO. 850 FICO.
Bet him $500, dude.
$500.
He wants to bet you $500
right now.
Right now.
Right
Not even
now.
tomorrow.
Not even tomorrow. We'll pull your credit for free. I won't even charge you.
Nato Leon, USDA loan. Do you recommend it? You know
nada.
what? I'm getting bitter at USDA.
Dude, don't get bitter.
I'm getting really bitter.
Don't
at
get
USDA.
bitter.
I don't think USDA is all it's cracked out.
Don't
to be
get
for you guys.
bitter.
The problem is the loan officers are marketing it.
Yeah.
They're pushing it out there, trying to suck you in.
Yeah. Well, USDA. Here's the thing about USDA. First off, is it zero down? Yes.
Yep.
Is there no mortgage insurance? Technically, that's true.
But there is.
Because it doesn't say mortgage insurance. It's called government insurance. Boom, boom. And is it better than FHA? Most of the times, yeah, it's 3.1 and FHA is 5.5. So is it better? A little bit. Is it zero down? Yes. But here's the catch. The property has to be approved by USDA before I even start the system. Before I even start the loan, the property has to be approved. Once it is approved and I find out that the property is approved, then I have to send the buyer through a really stringent underwriting program called GUS. It's Government Underwriting System. And there is a version of UFMIP, which is Upfront Mortgage Improvement Insurance Premium, that's on FHA, on a USDA. So there's an extra added cost that most people don't even know exists. But it's there. So your property has to qualify, then you have to qualify, and they hide the fees kind of. They don't really hide them, they tell you. But yeah. Why are you mad?
Well, because, okay, so what if I could get you a home loan that also is zero down? What if I could get you a home loan that doesn't restrict you to an area? What if I can get you a home loan that doesn't push down your ratios so you can actually get that house that you want? What if? Those three things. It's taking it from USDA to FHA. That easy. Will you pay the mortgage, a little bit more mortgage insurance like Lee said? Yeah, sure you will. But you're going to get everything else that you want, and you're not limited to that one program.
So CCG says,
I think it's good for the small group of people that it helps.
CCG says, I'll open my PFP so you can see. Cough up that 500. Tell you what, CCG, I got to pull your credit. I can't believe what you pulled up on the internet. I've been talking for way too long to know that the FICO scores on the internet are bullshit. Did I say that? Bullshit.
Yep.
Yep.
Nato Leon, talk about USDA loan.
We just talked about it. We just talked.
I don't know if you mentioned, but all you have to do is go to USDA.gov and look on the map. Look on the map of the places that you can actually get a USDA loan. It's limited to a geographic area. You can't just get it across the board. And in those areas, you know what they typically do not have? Condos. So you can't get a condo with it. I mean, unless it falls into that map.
Yep.
They typically don't have townhomes. With those other programs I was talking about, FHA, you can get all those. So USDA kind of explained it.
Yeah.
It's a map.
So we will do them. We will do the loan.
Program.
We'll do the loan.
I'm not saying it's a bad program.
But there's so many people coming at us going, hey, I want to use a USDA loan on my
middle of LA.
in my middle of LA property. I'm like, that's not the way it works. I know the commercials sound that way. Yeah, just like, hey, if you take this pill, you'll lose 80 pounds by next week. No, that's not how it works.
Navy Mom said 2 years.
2 years. 2 years.
So she bought a house 2 years ago, made $60,000 in equity.
Oh,
and where she lives,
no. It's way bigger than that.
Is this a booming town where she lives?
It's starting to boom, but that 60 grand doesn't give it credit. Doesn't give it credit.
I think it gives a lot of credit.
No, it gives it the 60 grand sounds good. Sounds good. Mm-hmm. But I happen to have done this loan, and I know that is a 33% increase in value. Not just 60 grand, because in that part where she bought, the houses weren't that expensive, but they're starting to get expensive fast.
So what does that tell everybody that's watching?
If you can get a house, get a house.
Yes.
It's scary as shit, by the way. I bought multiple houses. I get scared every single time. The last loan I was doing, I was like, dude, you sure I can qualify? He's like, dude, relax. You're starting to listen to it. Sound like a borrower. I'm like, I am a borrower. So you're also a loan officer. Yeah, thanks.
May I prove?
My proof. He did the exact same thing. Don't be laughing.
Don't hate on me.
You did the exact same.
Don't
You're like,
start.
am I gonna qualify? I'm like, relax, dude. Relax.
Fake news.
Fake news.
Ash, 1922. My husband got a $3.25 raise. $108,399.99 is our monthly income. Monthly income. What the? Getting ready to start. Income ready to start process. 9% DTI. 650 credit score. I'm gonna assume that's a year.
That's
Not
a
month.
Ash. You are golden.
That's a month.
You are golden, and you're in a spot where you really should start. If you're making $100 grand a month,
I want to do what you do.
now, I've done a few loans like that. I've done a few loans where they can. I did one of the. What was the name of that? Oh, I forgot about it.
Maloof Brothers.
No, it wasn't the Maloof Brothers.
Oh.
It was. I forgot the name of it.
Taylor
It'll come to
Swift?
me.
You didn't do her loan?
I don't think she needs loans.
Okay.
I don't think she needs loans. It'll come to me in a second.
Cambo, that's awesome. I'm getting 2% in seller concession though.
ZipRecruiter. I did one of the
Yes.
ZipRecruiter principles. 140 grand a month. Like I was like, that's your salary? He's like, yeah, we have this company called ZipRecruiter. I'm like, ZipRecruiter?
Yeah. Cambo, you're saying you're getting 2% in seller concession, and I'm assuming you're using that seller concession to do that buy down to get you that better rate, right? That's what you're doing. Here's another thing you could do, Cambo. Here's another thing you can do. You can absolutely do. Is if you have too much seller credit, you know what a lot of loan officers do? Is they give it back.
What?
So when you get a lot of, let's say you get $20,000 in seller credit, but your closing costs are only 10 grand. Only 10 grand, okay?
That's a horrible loan officer.
What they will do is they'll just say, get us an addendum to adjust the seller credit back down because we don't need that much.
No!
What would you do with it, Lee?
Principal reduction.
100%.
Today.
100%. So what that
Principal
means
reduction.
is you take that extra money and you apply it to the house, so you buy the house cheaper.
Yeah.
Cheaper.
And by
you
the way,
lock that
Cambo,
in.
if you get the opportunity to use that 2%, let's just say a $500,000 house, 2% is 10 grand. If you use that 10 grand to buy down the rate, you are going to refinance again in the future.
Wasting
That is
the money.
not the best use for the money. The best use for the money is principal reduction most of the time. I'd have to see your file, but most of the time it's going to be principal reduction. You take the higher rate and you understand that you are going to refinance at some point in the future. And then you take that 10 grand that you saved there, save it for when you refinance and rates all the way down in the 4s, and then buy it down with the 20 grand right there. You'll end up in the 3s, maybe high 2s, and you got the best package out there.
Yeah. Time for commercial.
If you need a badass loan, call a badass loan officer. You can reach your badass loan officers, Chris and Lee, directly on their cell phones by dialing the numbers on the screen. But don't call them right now because they won't answer. We are live on both of our phones. If you call after we're done with the live, we will help you understand and get your house in 2024. This will disappear in 5, 4, 3, 2, 1, bye.
Boom. Bad the scave. Average
Average-
cost to refinance.
What do you say?
Okay, so with everything included, and you didn't have the 5-year guarantee where you don't pay the lender fee on our side, worst case scenario, about 3 grand.
3 grand.
And that's
Now,
not
I would
out
say
of pocket.
Yeah.
That doesn't have to
3
be
grand.
out of pocket.
Now, that's not going to look like 3 grand. It's going to look like 6 grand. What? How is it going to look like 6 grand, Lee? How? I don't understand how it's going to look like 6 grand. Okay, here's why. Because you have a loan right here, and in that loan you have an impound account. And that impound account is collecting money to pay your property taxes and your insurance. Property taxes and insurance. And in that account is 3 grand, because every time you've been paying $3,000 a month, well, 500 has been going to that impound account, and there's 3 grand in there right now. When you close that loan out, that impound account is going to get refunded to you. And you're starting a new loan. But you got to catch up with that impound account. So the cost of the loan is going to be 3 grand, and you're going to have to put that 3 grand in there to cover the impound that you have to build. So it looks like 6 grand, but you're going to get 3 grand back as soon as the other loan pays off and you get your refund. It's a little complicated. But that's how it works.
Yeah, Ash 1922. Let's get T-Money back in office so interest rates can go down.
I think that's going to happen when
T-Money, it's T-R-U-M-P. You can't say the word. Why? Because of these platforms.
Yeah, they get mad at us.
They don't like him.
They get big mad if we say Orange Man.
Him.
Yeah, if we say Orange Man, we get big. They put like, don't talk about this. Like what?
I call him T-Money.
You also can't say the V-I-D.
Yeah, that one too. Armani, questions about zero down payment program. We already answered that one, but there's a lot of them, man. There's a lot of them. We have one in-house that's probably the best for down payment assistance. We have ones that will cover down payment and closing costs. We have some that are grants, meaning that if you live there for a certain amount of time and make a certain amount of payments, it's forgiven. We have some that are you pay back, that give you a little bit better terms. So we have a lot of them. You do need to have a job for at least 2 years. You do have to have a 600 or better credit score. Once you hit about 660, it unlocks all the programs. I do not like city programs. I do not like county programs. I do not like state programs, but we do them. So know this. Mm-hmm. What we'll do is we'll say, here's everything that you qualify for. This one does this. This one does this. This one does this. Which one do you want? So we don't choose for you. We'll give you the data. You choose what's best for you and your family.
Matthew Delgado 500 says, do you recommend getting a realtor's license in these times? Here's what I say, Matthew. A realtor is a profession. It's not because you could pass a test. Passing a test is the easiest part. Easiest part. And if you really want to be a realtor, study it. Find out what it is. It's a very good way to make a living. But there's a lot of realtors out there because they get attention. They're pretty girls or good-looking guys, and they get attention, so they think they can translate into the realtor world. It's a profession. You better actually know what you're doing. Know that if you want to become a realtor, find a realtor that you can mentor underneath for at least 2 years, and don't chase commissions your first year. Don't chase them. Because there are a bunch of branches that will say, hey, I'll give you 100% commission. And you'll be like, 100%? Shoot, I can make a lot of money. How much is a lot of money? Every time I sell a house for $500,000, I make $15,000. What? That's a lot of money. You're right, it is a lot of money. But you now go to that 100% brokerage and like, what do I do? Like, I don't know. You got to figure it out what to do. I'm paying you 100%. I'm not training you. What do you mean you're not training me? Yeah, and they die on the vine. They can't survive in the real estate market. Some of them can get attention because they're good looking or they have some kind of angle. They know people or something like that, and they get clients because of that. But those aren't your best realtors. Your best realtors shadowed a top producer for a year and didn't chase commission for the first year. They just do they do the hard stuff. They do cold calling. They learn the business. They learn the market. I ask a realtor right away. They say, hey, I'm a realtor in Rancho Cucamonga. I say, cool. How many houses for sale in Rancho Cucamonga? I'd have to look that up. Okay, you're not a good realtor because if you are, you know your market. What's the highest house that sold in Rancho Cucamonga in the last 90 days? The realtor that sells will tell me $1.18 million. What's the lowest price? Oh, we got one for $650,000 over on San Bernardino Street. A good realtor will know this stuff because it's what they do for a living. So, if you want to be a realtor, this is a shitty time to enter and the best time. Because if you enter right now, it's like going to joining the military, becoming a Navy SEAL. It's the toughest time out there. But if you survive, you're going to kill it in life. Yeah. You're going to do real good. Real good. Yeah. How good is real good? Realtors make $1 million a year. So do loan officers, by the way. $1 million a year. For good realtor, good loan officer, $1 million a year. 85% of the realtors will fail. That's not me saying it. It's California Association of Realtors and National Association of Realtors. Why? Because it can't last 3 years. They're getting by, hey, I know people. I'm good looking. People come to me. That works a little bit, but it will not work long term.
Yeah, Kiki said it's a profit deal.
What? What? Did I get a little too much of that? I guess soapbox there too much.
Shit, man. Okay. MVP, can you get a $100,000 mortgage with lower income? Husband retired, and we have $2 million in investments. I make 60 G's.
You got dropped off again, dude.
What the F?
I don't know, but I was say don't do that.
Don't do that.
You might want to launch over there because you're watching that. So, we are having technical difficulties once again, but we're trying to work through the technical difficulties in order to solve your problems. We are 2 licensed loan officers helping you get a house in 2024. My NMLS is 944254. His is
1066958.
You don't even have to look at the screen to say that. You're good, man. You are good.
I got it from the dome.
I guess.
From the dome.
Right from the dome.
All right, here we go, guys. You ready?
Oh, it's only saying 4 minutes, y'all. He knows how long we go.
CCG, man, that's our boy.
CCG in the house. Mr. Lee is scared. You're right, man. Can you tell? I'm terrified. Terrified. I am terrified. I actually, you know what, CCG, I got to say this. Every once in a while, somebody will come in. A hater will come in and start shooting at me. And then one of my fans on here will come by and defend me. And I feel so honored. I feel so honored. And I tell them, hey, listen, because you're defending me, I feel like the gladiator in the ring who always wins, but someone in the stands is going, please don't hurt him, Mr. Lion. I say, you know what? In honor of you, I'm going to wipe the floor with every one of my enemies in this ring, and I want you to watch. A little deep?
Okay.
Whatever.
All right, we got a rapid fire. You ready?
Okay, cool. Let's go.
All right. Uncle Callie reminds me of Goodfellas.
You're right. They're like, hey, I can help you. No, you are going to pay me back. You will. You don't understand. I have a superior lien to the bank, to everybody. I have a superior lien. Uncle Kelly will get paid.
Okay, Kevin Reyes, I need construction loan to build a house.
Kevin Reyes, a whole bunch of
Good
people.
luck with that.
Yeah, we do one-time construct loans, FHA, VA, and USDA. It's a very unique program.
Call us. Joseph, I want to own a home. Salary is $110K, no debt. Money saved. No money saved. What's the next step?
Real simple. Screenshot this, and as soon as we're done with the live, call Chris.
Cali Living, why does tax-free income qualify for a larger loan than the same amount of taxable income?
Easy. Very good question, Cali Living. That's because the underwriter and the system takes into the account that you must pay your taxes. So if you pay $100,000 and you must pay taxes, you probably only made $80,000, $75,000, somewhere in that range because you have to pay taxes. But if it's tax-free income, you made $100,000, and we calculate that into the system.
Asian Jim, how's it going today?
Dude, I feel uncomfortable when you say that. Asian Jim is going real good.
You say it again?
I know. What's up? I know, right?
What if he was black? Black Jim.
Yeah.
What if he was white? White Jim. Matthew Delgado, do you recommend getting a realtor's license? We already answered that one. Question about zero down. Already answered that one. Already answered that one. Already answered that one.
We are here for you
Ash
guys.
1922, ready to start the process. 9% DTI, 650 credit score.
It's simple. Call us, Ash. We're going to help you. We're going to help you get that house in 2024. Oreo the Frenchie. Depending on how many jobs in the last 2 years, I'd recommend a conventional loan. Oreo. All right. I guess you might be a loan officer, but I would have to see the file because I don't recommend FHA or VA till I see FICO score, down payment, and the whole package. Then I come up with it.
Yeah. I would be living in it. I've always had consistent jobs, but I've hopped around a lot.
All right, cool.
All right.
Oreo, okay.
Grunt style shirt guy was definitely not even a grunt.
It was definitely not even a grunt. Not a grunt. Oh, hell no.
Hell no. What do you got against Marines?
I got nothing against Marines. I used to give them rides everywhere, man.
What if you have amazing credit but inconsistent job history? That's what she said.
Oh, if you have amazing credit.
What's inconsistent job history?
Yeah, we'd have to see. If you have multiple jobs but you're always moving up and it's in the same, it makes sense. Just has to make sense. You can have 9 jobs, but if it's always, hey, I got a raise, somebody recruited me away, got a raise, it makes sense. The underwriter will buy it.
Yeah, CCG, you'll have a show here. Thank you.
Appreciate you, CCG. We appreciate. Lee is scared. You can tell.
I see you afraid to cough up that money.
I'm afraid to cough up that money.
Can't get any more than that. Than that.
What if you have amazing credit? Because we already did that. CCG 850. Yes, I do. What about you? I need construction loan to build a house. I think it's kind of recycled, right?
Everything.
I think we're doubling it.
CDL driver. I'm 24. Bring home 140 G's. I want to buy a home.
CDL drivers are my favorite. Nav. My favorite. We call them OTR drivers. OTR, you have to file your taxes correctly. Consult with us. We will teach you how to file your taxes correctly. If you don't use us, let me give you a hint. We can add back in depreciation and depletion. Talk to your CPA or your accountant and make sure if you're an owner-operator that your vehicle is on the depreciation and depletion schedule so that we can add it back in for income and that'll get you more house. We do them all the time.
User 6213. If I have a new build, but it won't be finished for 6 months, how can I choose my lender when I can't lock the rate?
6213.
So how do you choose your lender?
You just call us. Yeah, you just call us. Well, here's what they don't want you to use their lender. They don't want you to use your lender. Your lender would be us. They want you to use their lender. We don't have enough time, or I'd give you the reasons why. Tune in tomorrow. I will give you the reasons why. Did the rates recently change? They've drifted down just a little bit because CPI came in a little bit better than we thought. And household goods minus electricity and housing came in a little better than we thought. So the uncertainty in the market kind of went away a little bit because there was a fear that the Fed was going to increase the rates. He never said that, but it was a fear. And because of that, mortgage rates spiked, but they're coming down. And I believe they're going to continue drifting for the rest of the week.
CCG, I'm no hater. You know this. Been here forever.
CCG, we appreciate
Hell
you.
Yeah. MVP,
we appreciate you.
Loving on investments, plus I need $60K. Can we get a mortgage even though living on $2 million in investments? Asset depreciation.
Yeah, asset depletion. Asset depletion. If we do an asset depletion program, I actually did. One of my friends became a millionaire. Like literally went to Vegas, blackjack, hit a hand, millionaire. But he didn't make $1 million, so I had to do something called a SPIA, single premium immediate annuity. I annuitized. I took, let's call it $500,000, and I said, for the next 10 years, you're going to make $5,000 a month, and you're going to take it from your left pocket, move it to your right pocket, steal your money, and we're ready to get a house.
Cisco V, can I use my lawsuit settlement to use as down payment?
Absolutely. I just need to source that it came from a lawsuit.
Oh, you're an underwriter with unicorn.
Underwriter. We appreciate you.
Cisco V, can I get late payments removed off my credit reports? Credit repair?
Credit repair. They usually remove the full trade line. You have to make the call, and the credit repair people will go, yeah, this is doing good for you, but it's also doing bad for you, and then they'll make the call, and then they start a process of challenging the whole trade line. Move that over so we don't get banned. We're being tested again by TikTok. We're also being tested by YouTube. They're making sure that we are live.
Jessica, send an email Friday, an email listed in the bio. Should I email one of you individually instead? Just forward it. We'll check it right when we get back to the email. Yep. Send it again right now. We're going to go right back to our desk, and we'll answer you. You ready, dude?
Yeah, you know what? We appreciate you guys. Facebook, Instagram, TikTok, and YouTube. We answer your questions Monday through Friday, 11:30, 12:30 Pacific Standard. We've been Chris and Lee. We are out.